The best of Money Matters. Market View on Money FM 89.3.
You're listening to Money FM 89.3, and it's now time for Market View, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and companies to watch to help you better position your portfolios. I'm Alexandra Parada. The SCI closed up at 0.33% at 3,845 points. Looking at the local market, CapitaLand Investment posted a 24% drop in revenue due to the deconsolidation of Ascott Trust, while Mapletree Industrial Trust saw a 1.2% decline in revenue but maintained stable payouts. Earnings season also kicked off in full swing globally. Apple beat expectations on strong iPhone sales, but warned of a $900 million or 1.1 billion Sing dollars tariff impact for the third quarter, while Amazon posted strong earnings, yet flagged uncertainty ahead. Now for more market moves and views, joining us today is Benjamin Goh, Head of Research at SIAS. Hi Benjamin, welcome to the show.
Hey Alex, how are you?
Doing great. What about you?
Yeah, TGIF as usual, so looking forward to the weekend.
TGIF indeed. Okay, Benjamin, let's start. So the SCI opened in the green earlier. So what's moving markets today?
Well, the three local banks ended up in the green. Jardine Madison Holdings, DFI Retail Group, as well as Thai Beverage performed really well, each of them clocking in more than 1% gain today, which is, I think, pretty interesting because they're mostly in the consumer cyclical sector. As for property developers as well as REITs, kind of a mixed bag. So you've got CapitaLand Investment as well as City Developments leading the decliners. So that's about it for today's session.
Now, turning to local stocks, CapitaLand Investment reported a 24% drop in revenue for its first quarter earnings. Now, it's primarily driven by the deconsolidation of CapitaLand Ascott Trust. Now, how do you perceive this move, and what impact do you think it will have on CLI's future growth trajectory?
Well, so if we look at the financial statements that were released, some headline numbers, the revenue per available unit was up 5% year-on-year, mostly on the back of higher occupancy as well as daily rates. But the growth is likely to slow because of seasonal factors. Now, that said, the company has also stated that they have 1,800 open units across 10 properties, so future growth might be driven from these open units. The company itself has also invested $1.5 billion in lodging and data centers, but likely they will only contribute to the company's financials in 6 to 9 months. Overall, the credit rating is pretty stable. Net debt to equity is at 39%, not too shabby. Now, if you look at the response from the brokerages as well as fund managers, you have got DBS, Phillips Securities, Morningstar. They all have got buy recommendations for CLI with a upside potential of total returns of about 30%. So pretty well received from the professional money managers. So I think the drop in the stock price today because of its revenue miss was not really a big deal.
Now, Mapletree Industrial Trust experienced a slight 1.2% decline in revenue, but its DPU remained unchanged at $3.36. Now, should investors be concerned about this slight revenue decline, or does the stable DPU indicate that the trust is still in a strong position?
Well, a bit of a mixed bag. So you've got contributions from Japan are probably going to offset the slower growth in the U.S. as well as the sale of a U.S. data center next fiscal quarter. But overall, the fourth quarter rental revision of 8.1% was good. Going forward, the company has guided that rental reversion for the rest of the year might actually be a mid-single digit, really because of the uncertainty surrounding the trade war. So what the company is doing now is concentrating on tenant retention as well as cost controls, basically to weather any kind of possible weakness in its U.S. market. That's it. Again, looking at the smart money, DBS, UOB, and Goldman Sachs, all have got buy recommendations. Again, consensus upside potential of about 20%. So whatever that's happening in the stock price today and next week, probably not going to be a big deal in the next few months.
Now, looking at the global market now, earnings from some of the Magnificent Seven giants are out. So was it up to your expectations? What are your thoughts?
Pretty much a mixed bag. So the current first quarter numbers that were released, generally good, but the outlook for the rest of the year for most of the Magnificent Seven companies remains cloudy. Certainly the uncertainty around the tariff war, it's kind of impacting what we can read from the tea leaves. And the companies themselves have tended to be quite conservative in their forecast. So we won't know for sure what's going to happen until more news comes out regarding what's happening with the tariff wars.
Now, maybe we can start with Apple. So Apple reported a strong second quarter performance, even surpassing revenue expectations, with iPhone sales contributing significantly. However, its CEO did note a potential $900 million cost increase due to tariffs. And despite its positive earnings, Apple's stock actually fell over 4% after the earnings call. Now, how do you think the tariffs will impact Apple's profitability and its outlook for the coming quarter, considering the supply chain changes the company has made?
Well, if you look at the $900 million cost, that could actually be a provision. I'm not sure. I need to check the financial statements. And, generally companies put that in because of existing accounting rules. Tim Cook, the CEO, has also stated specifically that this $900 million estimate should not be used to make projections for future quarters. So from an accounting perspective, this sounds a little bit like a one-off. Certainly, if the tariff war with China is resolved, resulting in a lower tariff rate, then this $900 million estimate is probably going to be revised downwards. So this could be kind of like the worst-case scenario. In the longer term, your question regarding supply chain, company itself has made quite a lot of investments in the U.S., India, as well as Vietnam. But the shift in manufacturing base away from China is going to take time. If you recall, India and Vietnam, each of them faced about, 26%, 46% in additional tariffs respectively. So again, if the 90-day pause lapses without any kind of a deal, then those additional tariffs will snap back in. And, obviously in the near term, Apple's margins are going to be squeezed. So the outlook is certainly very cloudy until we know what's happening again with respect to the trade talks.
Now, Amazon's cloud unit, AWS, actually saw a 16.9% revenue growth in the first quarter of 2025, which actually missed analysts' expectations. Now, do you think this slower growth indicates a shift in the cloud market with Microsoft gaining more ground, or could it be a temporary slowdown for Amazon?
Okay, I think it's going to be temporary. So, to put things in perspective, right? You got Amazon Web Services, the net sales came in at $29.27 billion versus the estimate of $29.36 billion. So it's really a $900 million miss. So it's about 3 or 4%. So very small miss, right? If you look at Amazon's overall net sales, that came in at $155.6 billion, which is 8.6% up year on year, and it also beats the street estimate of $155.16 billion. So, we've already seen the stock price for Amazon falling in the pre-market session. I think that's largely a knee-jerk reaction. Company itself has issued quite a conservative guidance, I believe, citing current tariff and trade policies of the U.S. as well as ongoing recessionary fears. But I think this is kind of like the baseline. So I wouldn't be surprised if the company beats estimates in the next few quarters. Again, we want to keep in mind that Amazon Web Services is the market leader for cloud computing, right? So they are at the top. And of course, they're running very fast. So if you're at the top, then of course, after some time, you can expect growth rate to kind of, not be as high as previous years because you already have such a, big base, right? The last thing is, of course, we're going to be talking about Meta and Microsoft, right? So actually, the results from those companies actually provide quite a positive narrative for AWS.
Now, Meta actually posted a 16% increase in its first quarter sales, alongside a 35% rise in net income. However, the company did note that some reduced ad spending from its Asia-based e-commerce exporters. Now, how do you think this shift will affect Meta's outlook for the rest of 2025 then?
Fantastic news. So Meta really topped analyst estimates with its recent results, right? Wow. So not surprised about the reduced ad spending from Asia-based exporters. But, it really looks like Meta's investments in AI in the last few quarters is helping it to improve its ad targeting algorithms, as well as the personalization of social media content, which obviously will lead to higher sales, advertising business, so on and so forth. The company itself has already stated that they're going to be doubling down on its AI infrastructure spending, so that's all good. And I think what is really interesting is the newly announced Meta AI app. So they're going to be putting its own large language model, Llama, in the hands of everyday people like you and me. That might actually lead to further uplift if they can find some way to monetize it in further quarters. So that plus the fantastic advertising business results, I think that really bodes well for Meta for the rest of 2025.
Now, Microsoft actually reported strong growth in its cloud services as well, particularly its Azure, which saw a 20% year-over-year increase in revenue. Now, how do you view the continued strength of Azure, and what does this mean for Microsoft's positioning in the cloud space moving forward?
Well, the Azure Cloud Unit revenue came in at a pretty strong 33% year-on-year versus the street estimate of 29%, so that's all good. And the company itself has stated that 16% of Azure's growth was, mainly due to OpenAI, or rather the investment in OpenAI as well as the products that, is driving that. And that is actually an increase compared to 13% last quarter. So certainly Microsoft's investment as well as commercialization of OpenAI's LLMs, Gen AI model, it's driving its Azure's cloud computing growth. So that's all good. I think the momentum is probably going to continue, and that's going to help Microsoft to catch up with AWS, the current market leader. So I think that also provides quite a strong narrative that the AI spending trend is probably going to continue. So you've got Microsoft doubling down on that, you've got Meta doubling down on that, so that's all good. Unfortunately, NVIDIA has not released the results. They tend to be kind of late, so it'll be quite interesting to see how that actually impacts NVIDIA's outlook for the rest of the year. So that's certainly something to look forward to in the next few weeks.
And before we let you go, what else will you actually be looking out forward to in the coming days?
Well, earnings season continues next week. So we've got Disney and AMD, kind of my favorite companies. And I think it's interesting because Disney and AMD will provide more data points regarding what's happening with the consumer spending in the U.S., as well as the tech sector. So hopefully, and again, on the other note, the other point is that hopefully we're going to get more clarity on what's happening with the tariff wars, and hopefully there'll be some news on countries signing deals with the U.S.
Well, thank you so much for joining us today, Benjamin.
All right, thank you so much.
That was Benjamin Goh, Head of Research at SIAS. This has been Market View on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.